Hey everybody, Professor Kemo here. I'm just trying to give a little lesson from experience. As a prologue, I wanted to quote Bruce Lee here. I fear not the man who practices 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. And that is very relevant to trading, but we'll get into that later. Today I wanted to discuss emotion. Got some comments asking about it and figured I could try to help. So, the market has two main emotions associated with it: fear and greed. Now, there's many things that people could fear, but to keep it really simple, we'll just go over the very common ones. And we could start with the fear of losing money. You put your money in markets, are you going to lose it? Well, that's definitely a concern, but I've got news for you. You will. It's the name of the game. It's part of the game. We kind of pay our taxes that way. It's a tax to the market, and if you're going to play in financial markets, it's 99.9% guaranteed you will lose money eventually. The question is, how much will you lose? And you're the only one that can control that. I can't tell you how much you'll lose. That's something that you control. And we control that with a stop loss. A stop loss is very simple. It's pretty self-explanatory. You stop your loss. You have a loss. You say, I'm willing to give up this little bit. This is where I'm cutting you off. I'm not letting you touch this capital. Often we'll just say stop loss, and then we don't really think about the meaning of the word. It's to stop your losses. And that's the name of the game, is preserve your capital and stop your loss. So if you have a fear of losing money, this is how you decide how much money you lose. You control what you're putting at risk, where you're going to stop it. And you can stop it manually if you want, but generally it's not a good idea to do that. You should have invalidation for your trade setup, and it gets you out of the trade as early as possible. That's what a stop loss is designed to do. It's there for you. It's one of your tools, so you may as well use it. And if you don't use it, you're essentially lighting your money on fire and hoping it doesn't burn through the whole thing. Really, you don't have any control over the market without the stop loss. That's one of the only things you can control. Another fear of missing out. Well, I've got news for you. You will. It's just part of the game. There's no way you're going to take advantage of every trade out there, even if it's a chart that you're tracking. You will miss out. What comes to mind is Tesla back in 2020. That stock, I do believe, outperformed Bitcoin. And I had many people that said, hey, you're in markets. Hey, did you get that Tesla trade? And it's like, no, I missed out on that trade. Okay, well, what are you going to do with it? I don't follow that chart, so nothing. I don't care. If you look at the chart of the S&P 500 for the past 100 years, did I catch those trades? No, I wasn't born yet, but I missed it. I missed out. So all we can control with that is, pay attention to the chart you're trading, and you don't have to pay attention to every chart. That's kind of why I don't chart and trade in the shitcoins. I don't pay attention to those charts. I'd rather have something more liquid and trade with some size, get in, get out, and I don't have to worry about slippage and weird exchanges and shady things going on. I could trade one chart for the rest of my life, and I'll be just fine. So a fear of missing out. Another thing is if your chart already started going. Well, to mitigate that, you have to know how to enter a trending market that has already left, that's already blasted off. There were several entries in here. Your stop loss was kind of, far down, but you're breaking out. You back tested there, breaking out, and it just kept running. But you have higher highs and higher lows throughout this uptrend. And now potentially that is your entry. If you're afraid of that entry, then you're not mitigating risk. And that goes back to the stop loss. So does this chart keep running like way up high and keep leaving people behind? Maybe. I don't know. But I position myself with a stop loss to take advantage of potentially this thing just going to $1 million. I'm not going to decide that. So I can control getting in at areas that I'm interested in and look for a setup in that area. And I'm either going to win the trade or I'm going to get stopped out. So fear of missing out, yeah, you miss some and be happy with the ones you get. Number three, what I can think of is a fear of the unknown. Yeah, maybe, but I got news for you. We don't know either. We know nothing. We don't know what a chart is going to do. We don't know whether it'll go up or down. All that we can say is I have a setup and I have invalidation of that setup, and it either goes or it doesn't go. So we don't know. You don't know. Technically, nobody knows. There are some insiders that do know, but for the most part, the majority of us, we don't know. If you listed all the shit you know, it falls in this little green wedge here. The shit that you don't know falls inside the blue wedge. And the shit you don't even know you should know falls on the rest of that. So the name of the game is to just shift this green just a little bit more into the blue. That is where you get to self-mastery, and the rest of this shit doesn't matter, which is really just discipline. You discipline yourself, and that's really all you have to learn to make the rest of the shit not matter. So the shit you know, the shit you know you don't know, but then there's the shit you don't know that you don't know. Those are the questions you don't even know to ask, and that takes time and to understand certain things before you can even ask questions about it. I would say I'm in this vicinity here. The shit I know maybe goes a little more into the blue section than your average person when it comes to trading, but there's still so much I don't know. Number four, I could think of fear of failure. Yeah, fear of failure is a legitimate fear. Fear that you won't make it as a trader. Statistically speaking, you probably won't. And that really has to do with, self-discipline, because in this game of trading, you're really trading against yourself. You are your worst enemy. So if all these fears get a hold of you, you're against yourself. That's really the main fear, is fear of your own capabilities, being able to stand on your own 2 feet and step up and do it. The road or the path to success is paved with failures. You won't know until you try, and when you try, there will be failures. Guarantee it. But we learn with those failures. Every mistake you make, you learn with it. A lot of people, the mistakes I see is not implementing a strategy and stop loss. And you just have to stay disciplined with that and maintain the stop loss, not change the spot where you originally had the stop loss to give it a little more room. It's a strategy. You have to stick to it and stay very disciplined. So let's move on to greed. Greed, I guess, happens when you're afraid of selling. You're afraid you're going to miss out on the rest of it. So that's just like another fear. You have greed where you think that some asset that you've invested in is going to continue to run well beyond where you entered, or you entered late and you have to think to yourself, the rally's just getting started. I'm about to make a lot of money. and you've already packed your bags, so what else are you going to think? That's not thinking strategically. That is, that's kind of where the greed comes in, where you're not thinking realistically that Dogecoin has already went up. I'm thinking 2021. That thing already went up some 20,000%. And one of my friends was telling me, man, somebody invested like $300 into this thing and became a millionaire. And I said, well, you're not going to be able to do that now and put $300 in and become a millionaire. Otherwise, that other guy that put $300 in that became a millionaire would become a multi-trillionaire. And that's just the mathematics of it. So, you have to have proper expectations. Set your expectations, do your research, learn chart patterns, the way they kind of ebb and flow. They do repeat, and take profits. I pound the table on that. That's one of the main ways that I've become consistently profitable years ago is I implemented, no matter what, as soon as I get a decent profit, usually at the 1-to-1 fib extension, I close 25% of my trade. So close some profit. There's no reason to be working at these charts and not paying yourself for it. You are self-employed. You may as well pay yourself as an employee for working at the charts. And certainly manage those expectations. Stick to your strategy, stick to your stop loss, but manage your expectations of where an asset could run. But as long as you're closing some profit, it's good for your psychology, which would also help mitigate some of this greed and fear. When you have good psychology, it makes the charts flow a lot smoother. The stop loss, when you get stopped out, you're out of the trade. It mitigates the psychology of losing a lot of money. If you're holding a trade underwater, expecting it to come back, the whole time you have bad psychology. It doesn't feel good, and you're underwater, and you think, well, if I add to it, when it does bounce back, I'll be in profit sooner, or I'll make less of a loss. But I can tell you from experience, it's usually a bad idea to do. And also a very bad habit to start doing. That is not consistent. That does not provide consistent profitability. And finally, something I could think about is don't focus so much on the money. If you're focusing on your P&L, if you're focusing in on your money, how much money you could make on a trade, how much money you could lose on a trade, that's where you get caught up in traps. And to illustrate that, let me show you a video.
It's like a finger pointing away to the moon. Don't concentrate on the finger or you will miss all that heavenly glory.
Sorry if the sound was bad on that, but the lesson is still there. Don't focus on the money. Focus on your risk management. Focus on your stop loss. Focus on your strategy. Focus on your mental well-being and your psychology. And don't focus on the money. Once you become proficient in all of these things, the money will follow. That may be a hard concept to grasp for many that haven't been self-employed, but I can tell you from experience running companies that originally being focused on money and paying bills, it was not as successful until I stopped thinking about the money and worked towards a quality product and service for my customers. Then word of mouth spreads and you're overwhelmed with people that'll throw money at you. And this works no differently. If you focus on your process, the money will follow. It's kind of backward thinking, but you got to think outside the box. That's why not everybody can do it. Everybody's focusing on money, money, money when they're not focusing in on how or the process or perfecting their craft, bringing out something that's higher quality. So perfecting the stop loss. I mean, there's no perfect way to do the stop loss, but I'm thinking of it like being at a blackjack table and you're trying to double down on cards. You set down, say you set down 3 chips, and 2 of them are tethered to your finger, so that when the dealer comes to take, when you lose, the dealer comes to take your chips, he can only swipe the top one, and the 2 other ones come back into your pocket. That's kind of the way that I'm envisioning a stop loss. Is you're putting your chips on the table, but your stop loss says you're only getting that top chip. The 2 other ones go back to me, and then we repeat the process over and over. If you do that, so you only lost 1 out of 3. That gives you 3 more opportunities to get another set of hands that may be better. You could also think of a stop loss as that's all I'm putting on the table is this much. I've still got a stack over here. And if I do lose, then it goes to the dealer. But if I win, I'm getting 3 stacks. Same difference. And if you repeat that process in a strategic manner, over and over, very disciplined, repeatedly, this stack can grow much larger. And then your betting chips also grow larger. And that works with the law of exponents. The human mind generally doesn't think exponentially. We think very linearly. But if you think exponentially, then your chips doubling. Now you've got 2 chips, and then double that. And then you got 4. Double that, you've got 8. And this is an exponentially growing trading account just by staying disciplined. If you go online, there are resources to calculate an exponential growth curve or compounding interest. There's a compounding interest rate calculator online, and just treat that as a profit. Say you were to make 10% profit per month and run that out 5 to 10 years and see where you're at. The numbers are quite staggering when you play with it. And to round things out, back to the I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. This I associate with trading very much because of all the indicators that I've tried, all of the methods that I've learned to trade, but things really came to fruition once I practiced over and over and gave myself 10,000 iterations of a trade setup. If I have a trade setup and I practice it over and over and over, it kind of becomes second nature and you don't even think about it. And in trading, the less you think, the better. I mean, you got to think the robots, they're not programmed to think. They're not programmed to have any emotion whatsoever. The algorithms, they trade based on technicals and a setup. They either buy or sell based on pre-programmed reasoning. So there's no emotion that goes with it. There are news events. They can trade the news events with the new AI algorithms they have. They're designed to do that. But they don't think about it. They just have keyword searches, and once those pop up in the news feed, they trade that accordingly, and they're programmed to do it. They don't think. They either buy or sell instantly, and they do it way faster than we can do it. We just have to kind of follow along with the expectation of what they're doing and have our setup. So like I've said before in past videos, that I like Elliott Wave, but there's very few actual setups that I will trade in Elliott Wave. The same thing with the TD sequential, the same thing with Ichimoku Cloud, the same thing with Wyckoff method. There's very few setups that I will trade in each one because I've practiced those thousands of times, had thousands of iterations of them, and I know the success rate and the targeting. And once you do that repeatedly over and over and over with experience, it becomes second nature. You don't even think about it. You can make an argument to convince somebody else, but if they're not open to your reasoning and they don't understand it, there's nothing I can tell you. If you don't agree, you don't agree. But practicing the same iteration over and over and over. Say Camel Finance, he's got the cycle low, trend line break. That's a trade setup. Repeat it over and over and over. 10,000 iterations. That's kind of why we make it look like it's easy. Like it's just repeating patterns over and over. We've done this thousands of times and we have results over time that compound into a successful strategy. So don't go using an indicator or using something that I'm telling you or something that any other trader is telling you. Just don't go use it once, twice, and be like, that kind of sucked. Or he said that price was going to go down here and it actually went the other way. Look in the aggregate. Look at the track record over years of performance and then make an assessment. Or try the strategy out repeatedly over and over. You need probably 50 iterations at least before you can have an opinion. But once you get the trade setup and you repeat it 10,000 times, your confidence builds with that trade setup. And then it also eliminates the thinking. You don't even think about it. You have a higher high, you buy the higher low, set your stop loss. Happened to me yesterday. I got stopped out twice, I do believe, on the 1 hour chart. Maybe I shouldn't have been trading such a low time frame, but my system says, hey, take it, see if it goes. It didn't go. I'm okay with that. I accepted that risk. Find another setup. I have several ways to enter a market through various methods, and over time they've been good towards me. So I think that'll wrap up this video. Hopefully this was helpful to kind of explain the pitfalls of trading and the emotionality of it and how to control that emotion. You might become very cynical and kind of dead inside once you really get into it. It's like seeing a chart go up or down. Most of the time it doesn't faze me. If I have a really good day, then my hands will go up in the air and then I know it's time to close this trade because it's extremely successful. And if you have some losers, don't let it get to you. Just keep with the process over and over, the same iteration 10,000 times over time. It has a proven track record and you just stick with it. So that's why we have a good night when we keep the stops tight.